Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, and we take a closer look at some of the most interesting news items in the mining and exploration space. I'm very pleased to introduce a new guest, Jeff Pontius, an exploration geologist who has found and advanced a number of deposits culminating in successful M&A transactions, and who has made investors a lot of money over the years, most recently as president and CEO of former Kitco sponsor Corvus Resources, which was acquired by AngloGold Ashanti in 2022 for 570 million Canadian dollars. Jeff, welcome to Kitco.
Thanks. Great to see you, Paul.
Jeff, let's start focusing specifically on you. That transaction was in 2022. What have you been doing since you sold Corvus?
Well, I've been spending a little time at the Colorado School of Mines, helping on a couple projects, as well as doing some advisory work here and there, and also getting to travel as a tourist, which is a bit of a novel thing for me. So it's been relaxing, and but it looks like the sector's taking off again. So it's interesting. I think you'll probably see me involved in the future. I have been looking at a number of opportunities that sit, my favorite area is Nevada. As you know, with Corvus, we had some good success there. And so it's kind of hard to find good projects and good opportunities, but it looks like there's a couple out there that look interesting to me. So we'll see what happens in the future.
It sounds like we might see you return as a CEO of another company.
I don't know about a CEO, but it's certainly could be in a role where I could provide some guidance and maybe some actual on the ground exploration help, which would be really the key element for me. It's the part of my career I sort of miss more than anything is actually out on the ground chasing the discoveries.
Now, as mentioned, you sold Corvus Gold to AngloGold Ashanti. You were exploring in Nevada. You had the North Bullfrog project. You had the Motherlode project. AngloGold has, since that acquisition, it's continued to explore and develop and consolidate. And its project there is now called Arthur. What's your view of how it was originally the silicon deposit? It's now called Arthur. They seem to have done a great job in growing and building and really creating something there.
Yeah, I think Anglo's done a crackerjack job out there of really chasing the discovery. We put some of the original discovery holes in an area we call Linda Strip, which is the sort of the southern portion of what they call Merlin at the time. A very large oxide open pit, Round Mountain type discovery. It's incredibly impressive, and particularly with some of the real high grade nature of some of the upper part of that ore body, it's going to be a cornerstone asset for Anglo for 20 or 30 years into the future. So they've done a very good job of advancing it, keeping the locals on side, pushing the permitting forward. They're going to start, I think, with our North Bullfrog project, which is a couple million ounce open pit heap leach project. So Anglo is doing exactly what they need to do, and it's an impressive discovery.
I think one thing that underlines how impressive the discovery has been some of the royalty transactions that we've seen this year. Triple Flag, 450, 470 million Canadian dollars. Franco-Nevada bought a 1% NSR for a similar amount. Has that surprised you that there's been, let's say, a secondary market in the royalties that has been very, very active and highly valued?
Yeah, and in fact, it is impressive the value those have obtained, because when you look at it, the natural buyer for those royalties would be Anglo, and the prices they went for were beyond what Anglo felt probably that justified the acquisition. So certainly those transactions are at a premium, and it's impressive. I think given the size and the exploration potential of the asset, that those are probably still very good transactions for those royalty companies.
Now, it's a great week for you to make your first Digging Deep performance, Jeff. And we've got a lot of news in your bailiwick of Nevada. And we're going to start with a couple of the world's biggest gold companies, Barrick Mining and Newmont, both announced CEO transitions. Mark Bristow appears to have been thanked and excused at Barrick, while Newmont has telegraphed a more orderly transition of Tom Palmer being replaced by COO and President Natasha Villejuan. Mark Bristow is a geologist, as you are. 2 weeks ago, he announced a wonderful PEA at the 4 Mile project in Nevada, the same state where you operated Corvus. What are your impressions of 4 Mile and how that is looking?
Well, I've been following 4 Mile from its original discovery. This is nearly 10 years ago, and that project is incredibly impressive. Mark is an exceptional exploration geologist, and he's made the transition to the corporate side, which is very impressive, running one of the largest gold companies in the world, and doing a very good job of that, in my opinion. The transitions I see is Tom left Newmont in a very, as you say, orderly position. Newmont's done very well in the market, and it was a natural step out for him. He'd been there a long time. Mark, had some challenges with some of the African assets. Certainly more risk assets that had some issues associated with them. And so I think it was one of those things where probably Barrick was looking to maybe take a little different tact into the future. And so that was a bit different of transition out of there. But Mark Bristow is one heck of a geologist. And I'll tell you, he's probably going to end up doing something else that's going to be impressive in the future.
Okay, well, it's a great moment of time for Tom to transition out, for Natasha to take over. Gold at $3,800 per ounce. Newmont having rationalized its portfolio and looking like it's going to have a bumper third quarter when the results come out in a few weeks' time. With 4 Mile, Barrick has a put option to put that into the Nevada Gold Mines joint venture at a certain moment in time at an independently decided market valuation. I think one of the banknotes that came out after the 4 Mile PEA put a valuation of several $1 billion onto 4 Mile. I imagine that will give Natasha, presumably, a very tough decision to take to the board. Do they look to dilute their ownership stake in the Nevada Gold Mines joint venture, or do they write a check for potentially several billions of dollars to one of their key rivals? Jeff, you've been in the CEO hotspot, although in a very different way. What would you do?
It's interesting. I see 4 Mile as a cornerstone asset in the Carlin Trend. These things are long life assets that have great value associated with them. I would think it would get incorporated into the Nevada JV, and that Newmont would probably take the valuation that's out there for 4 Mile, particularly if gold price continues to go up, which it looks like it should. It's probably going to be a good trade, and it certainly keeps the Nevada JV as a major cash cow, basically, for Newmont. So if it was me, I would give serious thought to taking it into the JV.
Okay. Now, Jeff, you mentioned how your respect for Mark Bristow as a geologist, and Mark favored finding ounces over buying them. Obviously, that's a strategy that takes time to mature and perhaps moves slower than market expectations did. Did Mark have the right strategy but at the wrong time?
I don't know. It's one of those things that big companies, particularly big producers, have long-term strategies. Unfortunately, I think a lot of times investors have much shorter term view of how things should go, particularly when the commodity price is moving up and peers are moving up in respect to your stock price. So it would be interesting to see in the long term how it comes out. I will tell you, Barrick has certainly been looking at acquisitions over the last, I would say, during Mark's tenure. They've certainly looked at Corvus. They're out there looking, and I think it just becomes difficult when you have assets like 4 Mile to compare an acquiring asset versus what you already have in the bag. And it's a tough to make that decision on some of those things. But certainly, I'm in favor of the more balanced approach where you keep your fingers in the juniors, particularly with strategic investments like Anglo did with us, and you also drive your own greenfields program forward, which we see too little of, I think, in the majors right now. I mean, Barrick is a great example of a company that has a good greenfields program. And so, I think it's a balanced approach, and time will tell whether it's the right way to go or the wrong way to go, I think, for Barrick, but certainly it needs more time.
Okay. Now, you sold Corvus to a major, as we've mentioned. Today, the need for majors and the growing number of mid-tiers to replenish and grow their pipelines seems even more pressing than ever. Do you expect to see more M&A transactions going forward, more companies, more development stage companies like Corvus being acquired?
Yeah, I do. The issue comes as those assets that are the quality assets that big companies look for. I mean, realistically, most of the junior explorcos that are out there right now have got either recycled projects or projects that are too small or too low in quality for a major to acquire. Now, that's not to say a mid-tier might want to acquire those, but I think when you look at the real assets out there that are sitting there with that 5 and 10 million ounce potential, which is really what the majors look for, I think there's very few of those. And what we need is more greenfields exploration to go out and make more discoveries in the future that are going to fit the bill for the big companies. And they need assets that are 10, 20-year assets. They need assets like the Beatty asset down there that Anglo bought. And I think that when you look at it like that, there will be more transactions. I think maybe the mid-tiers might be the ones that are the real driving force in M&A going forward in the next 2 or 3 years here. But we'll see how it pans out for the majors and whether they find assets that they think are high enough quality to actually acquire and pursue and put into development.
Well, in terms of juniors finding big deposits, that obviously requires capital. And we're starting to see massive amounts of money being raised by juniors for exploration and development, such as NGEx Minerals recently announced a $175 million raise, Highlander Silver, $86 million, Blue Moon Metals, $75 million, G2 Goldfields, $50 million, Contango, $50 million. Jeff, when you see such large sums being raised, does this perhaps indicate the market is getting frothy, or is this telling us something else, do you think?
Well, I think there is a component of frothiness with that because some of these transactions are probably ones that are a little bit exuberant. But I think also that you're seeing a catch-up trade happening here. Unlike the boom we had in 07 to 11, where we saw more of a broader funding for not only the majors and mid-tiers, the developers, but also the juniors during that period of time, I think you're seeing a bit of a catch-up right now with the juniors. I think stock prices are probably pretty highly priced for most junior explorcos right now. We'll see that settle down over the next couple of years. But I think it's a good thing. I mean, certainly it takes a lot of capital to make a discovery. Corvus spent $70 million making the discovery that ended up in a transaction. So that's a lot of money to raise. And when you're raising it at $2 or $3 million at a whack, it takes forever and is incredibly terrible for the investor on dilution. If you can raise it in the $10 million, $20 million whack, I think it's really speaks to the fact that things are going to start happening in the Explorco type sector.
Absolutely. The NGEx raise I mentioned, I think they're only going to issue a handful of millions of shares for that 175 million. Another big raise announced this morning was Collective Mining, $100 million there, again at a sort of $18 valuation. So not issuing necessarily too much stock, not too much dilution. I think one thing looking at these big races, Jeff, it does seem that although the finance window is open, It's being very specific and very focused. As you mentioned, it's not like sort of 2017, 2018 when every junior could raise. It's being very focused. It's being very channeled into perhaps the bigger, the stronger, the better supported names.
Yeah, I agree. I think investors are smarter this time around than back in '07. There isn't this broad buy everything kind of mode. People are being much more discriminative about what they're going to take and what they aren't going to take. So I think you really have to have assets that are big, high quality assets to really drive a lot of this, fundraising ability that's out there in the market today. And I certainly see the Americans starting to get involved like they did in '07 back in the last boom. And we're starting to see, started out with hedge funds, and now we're starting to see some broader investment groups come in. I think we're in for a good run here for right now, and that the quality assets are going to get money.
And I think you're seeing some of, to riff on that a little bit, Jeff, I think we're seeing some of the better quality gold explorers. They're increasingly taking secondary listings on, big US exchanges such as the NYSE American. They're actively pursuing US investors.
Yes, and it was critical for Corvus Gold, and before Corvus, ITH, another company that I started and ran for a while. It was those U.S. listings were absolutely critical. We traded more on the U.S. side than we traded in the Canadian side, particularly when share prices are up in the $2-3 range. It's a much more attractive issue out there, I think, on the U.S. side.
Okay, sticking with the idea of, or the theme of new investors, and let's go back to Nevada. The US Department of Energy is going to take a 5% stake in Lithium Americas and a 5% stake in the joint venture company that is developing its Thacker Pass lithium project in Nevada. And that means Lithium Americas can now draw the first $435 million of a $2.26 billion loan from the US Department of Energy. Thacker Pass is due to produce 80,000 tons per year of battery-grade lithium in two phases of 40,000 tons per year each over a 40-year mine life. However, as Lithium Americas is based in Vancouver, Canada's government said it will review the deal. Jeff, minerals production is becoming strategic as energy production has in the past. Big news, the US government taking a stake in a developer. They did so earlier this year with MP Materials, which operates the Mountain Pass rare earth project in California. In one way, it sounds like good news to have an investor with deep pockets coming into your company. But how desirable or not is it really for mineral explorers and developers to have the US government as a shareholder?
Well, I think it's tremendous for assets like Mountain Pass, where it requires a tremendous amount of capital to really get the production side of that asset into commercial production. So I think that's key in those situations. As an investor, I'm not so sure that the government is as good as we would like to have with a quality fund or a mining group that understands our business a little better and the timeline it takes and so forth to get to production. So it's not an investor you're going to go on your next raise of money, go around and say, hey, US government, are you going to write me a check for $10 million? I don't think that is as easy as it will be for having quality resource investors that understand the business.
Okay. Now, a lot of the majors are making strategic investments in juniors, perhaps potentially lining up and having a good look at what may be their future M&A transactions. One of the juniors took an initial step in this direction this week as Rio2 took a 15% stake in Royal Road Minerals, buying most of a block of shares that were sold by Agnico Eagle Mines. Royal Road has exploration projects in Colombia, Morocco, and Saudi Arabia, and Rio2 is building the Phoenix gold mine in Chile. Jeff, buying strategic assets makes sense for Rio2, but I think people might be surprised that it went so early stage with its investment in Royal Road. What's your view of this particular transaction?
I think it was a smart transaction by Rio 2. I think that I know Tim and John pretty well, Tim Coughlin and John Hill. They're great explorers. They're quality guys. They're certainly the jockey you would put your money on. And so I think that was probably a smart investment. Exploration is a risky business. We all know that failure is really the thing that happens more than anything in this business. So, they're definitely taking a risk, but they were able to acquire the shares at a very favorable price, I think, and got 15% of the deal. So they're in a very strong position to go forward, and they've got quality guys, Tim and John running the show. And if there's something out there, those guys will sniff it out.
Okay. Let's send Jeff with let's say perhaps a broader view of things. Several people say that we're in the early innings of a precious metal bull market. Others argue we're halfway through the game, approaching the 7-inning stretch, because the gold price and the majors really started moving before COVID, which was 2020-21, and things have been building since then. What's your view? Where do you think we are in this cycle?
I think when we saw the last couple months and the rebound of the Explorcos and the juniors that finally get a bid, I think that's been a very positive indication that we're starting to see the actual boom take hold and begin to move up. I think we're early in the cycle. I think there's probably, if we look back at what it was like in 07 to 11, 12, I think we're in that early 1/3 or so of the cycle. We've got a strong commodity price, but that looks to be a price that has some good solid footing behind it, and that it could go forward. So I really think that we're probably in those early phases, and I look for 2 to 3 more years of pretty strong, move in the commodity price. I think we're going to see copper catch up. I think we're going to see the gold silver ratio get more around the 75-1. And I think that you're probably going to look at quality juniors being able to continue to advance. And if we get some significant discoveries, there's going to be some big M&A deals in the future, I think, over these next 2 to 3 years.
I think I would agree with you there. Looking back at the last cycle, prices really started taking off after the 2008 global financial crisis, and they continued building through to, as you said, 2011, perhaps 2012. So potentially we've got 2 or 3 years left to run of this particular cycle. Well, this has been a fantastic conversation, Jeff. I really want to thank you for joining us this week, and look forward to having you on at some point in the near future.
Great. Sounds good. It's always great talking to you, Paul.
Excellent. And of course, for our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.